Good afternoon, Scott Redler, T3 Live. What a day, what a week. You would think the last 2 weeks of August should be easy. You could be at the beach, you could be in the mountains, but no. If you did go to the beach in the mountains, you missed out. Probably one of the best volatile type of trades that we've seen, of the year. Starting from last week, even if you don't like being long, or you don't like being short, you had that follow-through breakdown. You had that breakdown of the range, the breakdown that started last Wednesday, a week ago, that saw some confirmation of that on Thursday and follow through on Friday into the historic 1,000-point down move Monday. As a technical trader, the writing was on the wall, from every other sector below the 200-day to the foreign markets breaking down, and then finally that took place. So you had your breakdown of the range and the trend that either got you out of the way so you can embrace the Monday volatility, or you made a heck of a lot of money short as it was a clean move. And then today, if you watch the morning call, which you should do, it's free every morning, or you're a part of Redler All Access, and you look at my focus section, I talked about how yesterday they scared the bejesus out of everyone with that late day rollover, second day in a row that I doubt that they do it again. That they're going to try and sell them probably earlier, which they did. They brought the market in the first 2 hours, and then once they couldn't take it lower and break it down, that chances are, that shorts would cover and we would get a squeeze into the close, and that's exactly what happened. So anyway, let's go to some indices. You look at the chart of the SPX and you will see, here is that upper channel. You can see it on the weekly chart, so easy. Channel going sideways, a channel that beat everybody down. Then you had this inside range within the channel that tightened it up, that gave you great points of reference, and then pow, you broke to the downside of the channel. Looked like it could have gone up here. I remember it really well because some things, go-to stocks, were still hanging in there. Names looked okay. We were heading into Fed minutes. Looked like perhaps we could go to the upside, but no. That happened, then that happened, and that could have got you at least out of your longs, and then that could have got you very, very short. As we broke below the 200-day, broke below the range, and then boom, boom. Okay, so with that being said, where did that bring us to? Basically, let's switch back to the spiders. That basically brought us down to the October lows, which we wrote the chart down on Monday, where potentially we could see. We talked about the measured move being to 195, which was right here, where it obviously went below it. But if you got out of your longs here, and you got short, you actually did better, than you would have thought. And if you were flat, it didn't matter, what happened in the first 2 minutes of that Monday. So anyway, this is where we put our pivot in, and then since then we have now built a lower range. So here's your lower range. Will we open up above it and fill the gap tomorrow, which it looks like we could, or do they do a misdirection move where they close us on the dead lows, gapped us up today, close us down, off the highs on Monday, opened it up yesterday, so we closed strong today. So conventional wisdom, the way they did the range way back when, they open us lower, but if they open us lower, you could potentially get a better trade anyway to fill this gap. And then that would bring it to about 197.98, and that would be pretty much, old support that turns into resistance that comes in right around here. And then, obviously, this is the bigger part of resistance with, that 202 level along the way. So here we are, the new range from 204 down to about 184, okay, with the bottom end being navigated. Doesn't mean it's going to end tomorrow. Maybe it does, maybe it doesn't, but you have another tradable pivot into a gap close, and then you have, bigger resistance a little bit higher. So we'll see what happens next. Overall, though, you do have a channel that broke to the downside and an intermediate trend that also broke to the downside. And if you trade for alpha and you trade for cash flow, this could have made your entire year from the short side and even from the buyable bottom on Monday. That's why we trade for a living. But if you were worn out and you were pissed off and you were, just a fraction of the way you used to think way back when, you might have missed this whole thing because you got worn out in this upper range, which is what the market tends to do to everybody. The ranges want to wear you out because they don't want anybody involved when it goes, because the market doesn't give money away. So anyway, here we are. That's your pivot. We'll talk about that tomorrow, and we'll see how we open tomorrow and work out a new plan. I'm sure the Qs look a little different or look kind of the same. The Qs, okay, actually poked its head up above this little spot. So I'm not going to get into everything, but the cues, a little bit of relative strength. Okay, so that's good to see. Technology poked its head above this little 3-day pivot, and again, the spiders have not. So maybe the spiders are next to do so. What did the IBBs do? The IBBs didn't poke its head above the trend, but again, lots of trades here. This is when it broke the 50-day. This is when it broke the head and shoulders pattern here. Talked about the measured move from 400 to the neckline of 360. That's 60 points from 360. That gives you 320. And besides the overthrow, here was your basic, measured move of your head and shoulders pattern on the bios. So if you made the money on a calculated short there, congratulations. Now the question is, what kind of bounce? So here is your pivot. Maybe it comes back up and retests a little bit higher. We could still be weak and markets could still go lower, but we could also continue, to, retrace a little bit. And if you were short from this break of the 50-day, or when it stayed on the right side of this trend line here and then broke 360, you made good money in 3 days fast. And then you even had a super buy in the hole. And look where it came down to, right around here, which was old support. So we'll see what happens tomorrow. So let's just talk about stocks. The stocks that were the best stocks in the past 3 days were the ones that went green on Monday. They were the ones that when the market was still down 600 points, they went green. Obviously, they were the go-to names that did break the week before, but if you got out the week before when they broke, you had the chance of buying them in the hole on Monday or potentially trading them with an open mind yesterday or today. Let's get through to a few of them. First one to actually take out its pivot and show some relative strength was Google. Google was upgraded by Goldman Sachs. Google broke above this pivot, which the market has not yet, and a lot of stocks haven't. So this still is providing some leadership. It filled the gap, okay, yes, but now, it's still, I guess, look at it, never hit below the 200-day. Now it almost reclaimed all the moving average. So this showed a lot of relative strength today and closed above the pivot. Doesn't mean you should be all in Google, but it just shows that a stock can do that, so maybe a few others can do that. Google did that, and so did Amazon. Amazon, again, these things have been trading vehicles. If you got out of this because the market lost its momentum when, this little inside triangle broke to the downside right there, okay, you got out or got short, you had 3 big down days, and then what did it do? It retested the prior breakout area. This too, all in all, still above the 200-day while most indices are below it. So, lost momentum, but it's still considered a leader. And then, this is the pivot area. So look at it now. It's one of the few stocks that broke above it. So if you had it in the hole today and you traded it for a squeeze above this, nice trade. Google and Amazon broke above the 2-day pivot, while a lot of things haven't. What are 2 other stocks that come to mind that probably could? If those 2 stocks did, and there are other leaders that were in the same caliber, maybe Facebook. Facebook, broke its trend also right here when it broke below this spot. Broke below the 200-day, came back above it. Maybe this tries to break above its pivot, which it hasn't yet. I'm long a little bit overnight, and we'll see if this could perhaps break above this and fill the gap. Let's hope if it opens up, you sell some. If it opens down, maybe you get a trade through this little pivot for a push up the same way Google gave you that trade through, and so did Amazon. So think to yourself before Red Dog gets to it, what was one of the other names that Red Dog had on his go-to list? Oh, Netflix. Netflix, what did you do? Okay, it also poked its head up. This is when the upper momentum broke. Here was your buyable craziness on Monday, held above the 200-day, created a small pivot, and just poking its head up. So if you needed a candidate to take home that might, be down with the futures, but, go green tomorrow, this is one of them like the rest of them. A little bit easier to hold. It's only 110. And this too could, see a move. It's poking its head above that. So out of all those names, they're all, Google and Amazon did it. Netflix is a little bit closer, and Facebook is lagging a little. Apple, which led us on what's it called, on Monday, did it on actually Tuesday, but lagged a little bit today. So the question is, can this see a little bit more follow through? Big time reversal, inside range. Here's like 110. If it gets above that, maybe you could see a little bit of a move to 112 to 114, and that would actually help the S&Ps. This is when it broke. Here's your gap down after earnings. Nice short here. Red Dog reversal. Retested the 200-day. Another Red Dog reversal. Went lower. Traded below the 112. Gave you a scale down move, and now, maybe there's a little bit more of a bounce play here in Apple. It didn't lead today, but it held in there, and if it gets above this, there could be another trade. That's what we're looking for. We're not looking for breakout trades. We're not looking for 52-week high trades. We're not looking for, both of those type of trades. You're looking for trades and calculated trades. You had your buy in the deep hole in the craziness on Monday. Then you had the back and forthness yesterday and today, and now you're seeing if any of these could break above a pivot, and you're starting to see some of them do that. Not all of them, some of them. So we'll see what happens again tomorrow. We could still open down tomorrow. It wouldn't surprise me considering the misdirection that we've seen, when they try and mess around in the lower end of a range. But, as of all, if you took some money off, they can't take it back anyway from you today. And today was a great strategy. Everyone thought they were going to fail again. They were going to get crushed. Oh, wait, the last hour, it's going to roll over again. But again, how many times did I say again today? If you read the note and you watched the morning call and you use your resources, you would have said, oh, Red Dog said that potentially that doesn't happen today. Be careful and maybe be long. And if you're on the VTF and you are a subscriber of that, you would have seen around, I think, 2 o'clock or 1:45. I got long around 190.50 and stayed into the end of the day. And that's the luxury of being a subscriber to the VTF, the virtual trade force. You can see our positions. You can watch everyone talk live because we're not always on Twitter all day long. We do our best to be there to help and guide, but we have to do what's in front of us and where we allocate our time. And that's about it on that. So what else? What did Tesla do today? Tesla acting a little bit of more of like a laggard. Hanging in there. Maybe there's a trade tomorrow if it gets through this. Below the 200-day, so relatively weaker than the other 5 go-to names. Mobileye, what did you do today? Hanging around. If you remember when I had it on as a swing trade, I got out here. This was a nice sell, by the way, when it broke the 8 and 21 day. If you did that, you don't have to mess with this craziness. And now it's trying to hang in there too, creating an inside range. We'll see what's next there. But again, I would give it some time. This is an expensive stock, so we need a strong market to be able to buy expensive stocks, and stay with them. If you have it in the drawer still, you know what, you're doing just fine. Still, all the way up here from the Red Dog reversal and from when it broke the descending channel way back when. That was all the way down there. And then if you got involved here, you're still using a tier system, did just fine. So we'll see what's next there. The banks, what did you do? Banks are still in the lower end, so I guess we'll see, if they could rally a little bit more. If it gets above this, Goldman Sachs has a bit of a trade. All the moving averages and resistance are in front of it, but there is some a spot in front. Citigroup, same thing. None of these banks have cleared this weekly pivot. Here's your low, inside day. Looks kind of like the spiders. Not leading the tape like tech, but in line. So we'll see what's next there. You don't need to be in all the banks. TLTs gave you a blaring sell signal. This was your sell signal, right? On Monday, capitulation to the upside, sell. Same way you had it to the downside in the overall market. So if you were in the TLTs from here, that was a decent sell signal. Okay, and then broke below there, and now you had another move down. So now here you're at the 200-day. So we'll see how we open tomorrow. But if you sold the strength in the TLTs, which you're allowed to trade the TLTs, if you bought it here and you were trading the trend above the 8-day, that was your sell signal. And now maybe, who knows, maybe it's worth a look here, 121 down 7 points. Gold did the same thing. Gold gave you a crazy sell signal here, an outside day on Monday, even before the market rallied, giving you clues that we could rally. Traded above the prior high. That's your signal to get out. Closed below the prior low, outside day, now all the way back down. So, if you did sell it there or you got short there, this is a spot to probably cover. And, right around here would be, maybe a spot to take a look if you trade gold. I haven't this year because it's just not that compelling. And with all that said, each day there's a different historic headline. Some people are on the wrong side of it, some people on the right side. Maybe you bought the dip last week and you capitulated Monday morning because your broker said, oh my God, it's going to be the worst day of the year, or whoever. Or maybe you sold into the weakness and got short last week and covered into Monday and bought some cheap stocks or waited till yesterday and did some today. Lots of ways to go about it. Lots of ways to put together a process. But you're only going to do it if you prepare and you learn. And if you're watching this video, hopefully you're learning. If you bought some of our products and some of our subscriptions, you know what? They do cost a little bit of money, but they could pay it in 10, 20, 30 times. And I'm just proud of the virtual trading floor because guys are communicating. Everyone who's not on vacation, I think have a smile on their face and are making their year in the last 2 weeks of August. And it's the only business in the world where that could happen, where the opportunity is endless if you're in the right place, right time. And opportunities when preparation, luck is when opportunity meets preparation, or something like that. It's been a long day. Have a great night. I'll see you tomorrow.